The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition and very special edition of the Power Trading Hour. It's the bouncy day. We'll talk about that in a minute. And of course, as always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So we're off 5, is that right? 5, yeah, 50 on the Dow, 5 on the, maybe less on the S&P. This thing's bouncing around like a gas gauge on an old VW from the 60s. But the direction, and it looks fairly easy to see. I don't do much intraday trading, but added some positions today. And to me, the pullback down this morning was an absolute gift. I was adding positions in both newsletters. I was doubling up at some lows on some positions. And so when I get out of them, those ads probably here in the next hours or hour and a half, I'll actually have some more additional room underneath these. But, man, it doesn't get any better than this, and that is push everybody out, get them out, and then, as they said in the den, the rip-your-face-off rally that comes after these huge moves down. People will be shorting these things for weeks, and they'll be on the wrong side. The market goes down very fast and then goes up kind of fast. The problem is that most people continue to short when out of 12 months of a year, even a bear market, you probably want to be short about 3 of those months. It may go up on light volume. It may do all kinds of horrible things. But for the most part, you want to be short about 25, 30% of the time. And you want to be either out waiting for the next leg up, or you want to be, long if you can find some things rocking the CAS bar. I'm actually, I'll talk about one that I couldn't get in the newsletter because it happened so quickly. I was ready to click and send the newsletter, and the thing was already up 75 cents. But I think I told 1 or 2 of our subscribers in the den about it, and that was Micron. This thing was making signals, shooting off flares, telling me that if I wanted to trade at least intraday, this thing was going to rip some people's lips off. And I got that down at like just, 37.80, something like that. It's printing almost $40 right now. So something I don't do very often, which is trade intraday. I'll sell that out before the close. But there's a handful of those. Had a stock that I wanted to get in the Tech Insider and got a gift today, and that is a horrible market to let me back in it. A lot of other stuff happening. Was in a sector that really was kind of soft this morning, was adding to it. I'll briefly get out of it, but that gives me a little bit more cushion on the downside. One of the other ones I had from last night is up 4% on the day already, and my guess is it's got a huge ability to go kill some shorts on the way back up. But got some ETFs, but you know what? A little downside this morning. I was early on one of them, and looks like pretty good on the rest of them. So I'm going to be happy. And I was actually getting ready, wanted to find a new theme song for what's going to happen, I suspect, for a while, and that's the bouncy dance.
Care to bounce?
You care to bounce?
Bouncy, bouncy, who's such a good time? Bouncy, bouncy, who's all in the line? Bouncy, bouncy.
It's time to bounce, folks, so get your seatbelts on. These can be quite wicked and incredibly fast. My thoughts right now is that off the lows, we could get back up to the 2,700 area, and that may be by next Friday. And that wouldn't hurt those folks that think the end of the world's coming, it's Armageddon, all that stuff. That would still be just kind of normal movement. We talked about, the market falling apart in 2000, and it actually rallied all the way back up into March before the real destruction started to happen. I'm not bearish. The reason why is that I'm bearish about markets like Bitcoin that have zero value. I'm bearish about pet.com that didn't make a dime. I'm not incredibly bearish about stocks that actually make money, ones that have lower taxes. And what have we had? We had kind of the equivalent of the taper tantrum brought on and pushed on the market, and we had something taken away. Is it racist to say Indian giver? Because that's all, when I was raised, that's what it was called. I don't know what it's called now. I know that you can't cross your legs and call it the Indian sitting thing anymore. I just don't know. Political correctness is basically it. I don't know if I want to know. Just seems, I never meant it in a bad way. So, you never know. Anyway, my thoughts out here today certainly are the market was a little teed off that it thought it was going to get $700 or $800 million worth of infrastructure spending. And we've seen that in the bounce of the dollar. They were predicting this thing to go down to 82 probably, or I thought it was too. They snatched that away. And what did they do? They replaced it with a spending bill that's probably going to be swamped by new taxes coming in, just the repatriation. Plus, what's going to happen now for people that haven't sold stocks for 8-9 years, since 2010? They've sat on their hands in these IRAs. And guess what? This is the first time they've been scared out. Most of these things happened overnight, like the election night. By the time they came in, the war was already over before they could blink. This one, they've had to sit there and watch their things go down, and a lot of people have sold. They're going to have huge 200-400% increases in some of these stocks, and they're going to have to pay taxes on them this year. So why I am not a fan of adding $300 billion to the deficit. Once we add about $400 billion back in repatriation, and we add maybe this was the plan all the time, to swamp the market, get everybody out of their positions, so we have to have taxes paid this year on it. You always want to look for the alternative move. But for me, man, I think we've got everything we want here, and especially in very deep shorted stocks, look for that kind of rally to run through the whole next week. And literally every sector is more oversold than it was in March in 2009. So in March in 2009, we had a nice little bounce in, November? It kind of came back on lighter volume. While we still had people predicting the end of the world, it didn't happen. We found a nice little low out there. But this is even more oversold than that March low in 2009. So expect some big moves out of these stocks. It doesn't mean that we're going back up to the highs, but it does probably mean that we're going to have a rip-your-face-off rally.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. What do we got? Well, we need to do a little bit of history.
And it's all just a little bit of history repeating.
On this day in 1964, it's estimated 73 million Americans were watching that night as the Beatles made their live U.S. television debut. Sullivan gave his now infamous, now famous, infamous, famous, I guess, intro. Ladies and gentlemen, the Beatles. And after a few seconds of rapturous cheering from the audience, the band kicked in to All My Love. And 50 seconds in, the first audience reaction shot of a performance shows a teenage girl beaming and possibly hyperventilating. 2 minutes later, Paul is singing another pretty mid-tempo number, Till There Was You, from the Broadway musical Music Man. They're screaming at the E, which I was actually in the Music Man in my high school play. There was a screaming at the end of every phase in the lyrics, of course, but to view the Broadway today, it seems even more anticipation by the relatively low-key performance itself. And then came She Loves You, Yeah, 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 and the place seems to explode. I never was a big Beatles fan. I didn't think that they were horrible, but I thought that there were a lot of people better. Maybe it was because I didn't get to listen to them really until the 70s. But on this day in 1964. Okay, options. I want to get right to it. We got options. We got lots of options. And this is where you don't want to hold these things hardly at all. The reason is I don't like options in markets like this. When markets are flat and the VIX is low, you can make some fairly good money in options. When VIX is high, the implied volatility is high, and the price is high, you can make money, but man, it's 10 times tougher now to make money in options than it was before this market turned south. So if you're keeping an eye on options out here, just remember that if you've not seen huge volatility and huge IV in options, it makes it very tough. What I like is to be buying puts with low volatility at highs, and I like to be buying low dollar stocks like $1, $2, $5 stocks, if possible, at lows. So, you can have some of those. There's just not a lot. Unfortunately, there weren't a lot of $2 to $3 stocks actually setting up that well. So I'm going to have to go with some other ones. But, there'll be a time when those dollar stocks start rolling again. Unfortunately, after huge moves like this, people want to go where everybody knows their name. And those names, of course, are the usual ones that are always flashing on CNBC and Fox Business Channel and Bloomberg. The stocks that they're not talking about, those tend to be a little slower in the moving channel. But I think within a couple of weeks, we'll have a fairly decent two-way market going on. And the argument will be between the bulls and the bears. Just hard for me to see with a vastly and better improving economics, which are going to be slightly offset by higher taxes, are going to rule the day. I think the economic train is on the road. If I would have been a lot more sanguine about a possible pop, if we had seen a lot more in the way of the dollar moving lower, it moved higher, which is telling me that the spending is not that horrible, regardless of what I hear reported, the yelling and screaming. I think it's going to be easily offset. And, of course, if you go by the numbers as the press does for the Office of Management and Budget, they can't say that there's any more money coming in, even though we had a massive tax cut. They can't put that on the line. So everybody's kind of fixed in this world where reality doesn't exist. We know these companies are going to bring that cash back. We know they're going to pay 21% on it. We know that there's going to be a lot of tax money coming in, and probably a lot more tax money coming in with, as one of the gentlemen said, a taxable event, baby. You got to get the people moving in these markets. And the old saying is everybody is a genius on the way up. Now the question is, can you make money in a sideways market or a market that goes higher and lower? This is where you earn your money, baby. And if you're in the indexes, you're probably going to be giving away a lot of money on the up and down sides. But we'll talk more about that. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always put a message in the den. So we'll keep an eye on it. But, yeah, the first question comes out here. And that is, what am I looking for? I'm looking for something around that 2,700 level on the S&P cash. I think we could easily get there. And if the market is not in a bear market now, that 2,700 level will start a very long-term plot to go retest the highs. We had volume at highs. It wasn't light volume, so we can expect, I suspect, a retest. But love the blowout. I'm starting to see these metals. As I said yesterday, didn't really think that gold was going a lot lower, but I thought that my thesis since December was that a lot of this spending was going to lead to massive inflation. And that thesis has gone away. Can gold drift up to 1,400? It can, but I thought it would take a path of being up every day a little bit for the next year, and I don't see that anymore. So more of a trading vehicle now than a great investment vehicle. But that also means that we're going to chase people back into other things like going after technology, that kind of stuff. So we'll be seeing that. Anyway, we'll follow it here, but I've got a intraday trade on, so I'm going to keep an eye on the side all the time. But I think we got we got a fairly good opportunity. And you know what? Everybody said if they got an opportunity to buy the retrace, that they were going to buy it. How many people do you know? I'm not talking about people that trade every day, but I'm wondering how many people at home, the people that don't call, the people that aren't in the den, that said that they were going to buy a retrace, could do it. I always think of the Jesse Livermore story that he used to tell other folks. And he said there were two gentlemen talking about a duel. Of course, this is like 1920s or 1910s, so maybe people still did it. Maybe this is just apocryphal from his childhood. But two men are talking, and one guy who's the assistant to this guy says, you know, I can, in a duel, I can snap a wine glass at 20 paces. And the other guy says, well, that's all good and well, but how good are you at doing that, snapping a wine glass stem, when that wine glass is got a loaded gun pointed at your heart? And that's why you get the big bucks for ignoring all the noise and going with your gut that is developed over a number of years, and the charts. We'll be back after this.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. And of course, I'm just going to have to play the living daylights out of this bouncy song.
Care to bounce?
Yes, we're celebrating the bounce, and of course, everybody's going to be a little relieved out here. We're up 11 points on the S&P cash after being down, what, 50, something like that? Same thing in the Dow was down 500, I think something like that. So we'll look and see what's going on. Again, bear with me because I've got a day trade on that I'm wanting to get off of, and we'll keep an eye on it. But I think it's going to do well into the close. But pretty good. You get a bounce on a Friday with everything in the world out there against you. That's a pretty good signal. Statistically, the best days to buy, not intraday, but longer term, are all are Wednesdays and Fridays. So, interesting thing. It's not a huge advantage, but it is an advantage. It is an edge to buy the close on Fridays and the closes on Wednesdays. That may just be because options delta neutral days are on Wednesdays once a month. You can find some other reasons out there. Anyway, we can look at some charts fairly quickly. I like it. I like it. Okay, so what do we have? Well, we certainly had Intel come and do exactly what it should do, which is come back to this support level and do it on light volume. We had a gap up on this earnings date, which was on October 27th. It did it with 90 million shares. 90 million shares. Came back a couple of times, first time with 27 million shares, another time with 45 million shares, got up, broke the highs on earnings, and then everybody decided to climb down on it. Yesterday, we had 42 million shares. Today, it spiked down into it with 30, and that's one of the reasons why I decided to go whole hog into Micron down at about 37.80. And we'll see. I'll be watching that into the close. Not going to hold it into Monday. I've got a lot of other stocks that I like better. But I was starting to see those signs yesterday that the SMH looked like it was having a low, and that may have been a little bit because of NVIDIA. We'll talk with Tom O'Brien about NVIDIA at the 3:30 hour. But you had this nice little pop into it yesterday. The volume was a little bit more than you would have liked, but not uncommon when everybody's on one side of the boat. December 6th low at 95.92 on the SMHs came in with 5 million shares. Yesterday, he had 15 million shares, but it really didn't break it. You spiked it today, and we've got that with about 10.3 million shares. And maybe you got the idea right now on why I'm probably not going to be holding Micron through to Monday. But a decent day trade out here. I've got other stocks that were testing lows on much lighter volume. Some of those retraced fairly well. In fact, I bought a biotech yesterday at the close. It's up about 5% on the day already. Some of these things I think are going to rip some people's heads off, mostly because they are just so absolutely sold out. Combination of sold out and massive shorts on top of these things that are going to continue to drive these people probably nuts as the market drifts a little higher. And again, this could be nothing but a oversold bounce in a bear market. I'm not going to jump on you on that, but I'm going to say that I would not be surprised that even if you're bearish, you may have 2 or 3 more months to wait. And my thought is as long as these things look good, I'm buying stocks that have low volume tests of previous lows that came down on lighter volume. I'm more than willing to put money at risk. And how many times do you get to buy a market that is more oversold than March of 2009? So that'll be it. Value. Oh, okay. Evaluate what has happened so you can apply what you've learned. Okay. So what else do we have? Let's see if we got any more emails out here. Okay. So let's take a look at what I thought was the canary in the coal mine. But I only had one of them, so it wasn't enough evidence to make me think the wheels fell off the wagon too far. in the market. And are we doing okay here? There we go. That was the VNQ. We talked a lot about this a couple of weeks ago. This one kind of failed. Today went a little deeper, came back up here. This is all about higher interest rates and REITs. This is probably going to be the best indicator of how weak the market is, because it was the only sector that really failed before everything else. This was telling you that bonds were moving and that interest rates were going higher. Of course, it's all about that. If you're trying to sell lots of, especially commercial property, it's very hard to sell commercial property for more money when interest rates are going higher. When they're going lower or stay low for a long time, easy to find the bigger fool to sell to, and we'll be in that. Okay, so what else do we have out here that people want to talk about? Okay, question about Avago, AVGO. Of course, they're trying to buy out Qualcomm. Qualcomm gave them a big raspberry and said, this is your final offer. It's not any good. Go away. And my guess is that they'll come back no matter what. Broadcom, Avago, whatever you're going to call it. I hate stocks with two names. Of course, they didn't hate, but they found a horse with no name in the desert, if you believe the song. But on this one, you did rip through that previous low out here on September 25th to 231.53. There's been damage done in this semiconductor and especially phone system ecosystem. So I'm not saying there isn't, but I'm probably just saying that there's a lot and far too many shorts in the market right now. So just keep an eye on it. But these things are kind of tough, so we'll keep an eye on that. Could you get a bounce? You certainly could. I think this thing could go to 245 in a heartbeat. At 230, that tells you where you are at. Let's take a quick look at Apple, then we'll get to NVIDIA. Okay. Another beautiful spike into Apple. Went right into the 150 area, which this gap goes back to on September 26. You had 36.6 million shares on the upside. You spiked that with 54 million shares today and rotated back up. So you're basically $5 off the lows in Apple. What's the last quote on this thing? 154.33. So my guess is this thing's going to go up to 157s for the close today. So we'll look at that. Make sure and give me a call. I want to hear your dulcet tones on the phone. 877-927-6648 on a very special bouncy version of the Power Trading Hour.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
We had a wham, bam, shang-a-lang, and a sha-la-la-la-la-la thing.
Why would we have this song? Don't know it.
Shang-a-lang and a sha-la-la.
Eh, who knows? Anyway, what else do we have going on out here? Okay, we looked at Apple. Let's take a look at Skyworks Solution, SWKS. So we've come back down. You've had a lot of energy in Apple. Is the worst probably in? I suspect so. There'll be people out here that got washed out, wish that they would have, probably sold at the lows today. They'll probably be thinking about buying back in on Monday. But, a lot of these things didn't look that bad. Skyworks Solution had a nice gap just last week on the 6th with 8.5 million shares up. This thing never really came back. So if the thesis of people quit buying smartphones, it's probably not true. The question may be, are they willing to pay over $1,000 for a smartphone? That may be yet another story. Either way, Skyworks Solutions, a lot of these other ones, Avago, Qualcomm, will all be looking at these. In fact, Qualcomm, let's take a look at it after it said adios to the Avago folks on the buyout, or Broadcom on the buyout. I hate Alphabet and Google for the same reason. Okay, we just need to pick one name for a company. We don't want all a little different. It's nice to break it out for earnings, but in reality, we don't want to be talking about it. Okay, Qualcomm did kind of pierce down there, and it's doing okay now, so there's no big deal out here. The idea will be that this thing will try to be bought out. That becomes more problematic as interest rates go higher. And I guess the lesson is going to be that these stocks that get bought out, everybody always asks me, why do people buy stocks at the high? I mean, not individuals, but I mean other companies. Why would you buy companies at the highs if you're a company? Well, the answer is that normally the interest rate is the lowest. And in 10 years, if the company keeps growing, the more important thing is the first 3 or 4 years, until you get that thing rolling and adopted in your company, getting rid of all the overhead, duplicate overhead. You need those low payments. And just like people buy cars for low payments and probably go far too long on the terms and the months, even these big guys buying big companies. I just wouldn't be happy with Avago. When we actually look at companies, they wanted to give a lot more money in the form of their stock. And this company's got like a 200 PE. So literally its stock, as far as I'm concerned, is no better than some of those pharma companies that kept rolling everybody up. This thing did come down on higher volume back in here. I think a lot of that had to do with the Qualcomm buyout. But the William Buffett story about you don't know who's swimming without a bathing suit until the tide goes out. Well, the tide's gone out. So if you've been looking at stocks and wanting to find stronger ones that are going to race back up to the highs, of course, we want that leg back out here from January 5th down to these lows just a few days ago to certainly come back with lighter volume. A lot of these in Apple and Qualcomm and Avago all kind of came back with more volume. So these things are going to have to, if they're going to go back higher, going to have to consolidate for a while. So don't get too excited on that. So, okay, what else do we have? I got some emails here. I want to look at IBM. I haven't looked at them in a few days. This thing kind of got washed out. Actually, well, that is interesting. This thing spiked down with about the same volume of the November 15th low, 4.7 million shares. You had 6.8 million shares yesterday. Today, 5.6 million shares. But it looks like it's going to hold that low for a little while. Energy wasn't really that bad off the highs. It's been kind of bad the last couple of days. I still don't see IBM gaining that much traction. I think this move to 171 had a lot to do with far too many people being far too short and a market going high. I would not be short IBM right now either. My guess is that, again, when we look at people shorting stocks, that's one of the ones that they're going to hop on the hardest. So I'll continue that. Okay, so that's IBM. Who else do we have to get to? Okay. Okay, so is that right? I keep worrying about stocks and my ticker. Yeah, that's right. 2592. My guess is that we do close above 2600 today, and that kind of puts a nail, at least a temporary tack, in the downside of this market. What are we up? 11 on the S&P, 90 on the Dow, 20 something on the Nasdaq. Kind of bouncing around too much to get an actual fix. So let's take a look at it. Got another one that wants me to take a look at the IWM. Again, if you need money, you're probably the worst off in the economy right now. So you want to keep an eye on that. Let's see what we got here. Well, you went into the 144.50 low of November 15th. Got about 34 million shares now. This looks like it could hold for a while. And again, we want to start looking at numbers and where you would think that both resistance and confluence come in. Your first band in the IWM on the upside is going to come around 147 to 149. So you're not that far up. Now, this isn't one that's a wall. This one's kind of like a walking in spongy soil where you might lose a shoe. So there's a little bit of resistance going through it. It's not a giant wall or anything. Some of these things are going to have much tighter ones. I'll be doing some scans over the weekend and look at how these confluence levels set up, because they're probably going to work fairly accurately in the near future. If you don't have Tom's book, The Art of Timing the Trade, probably take a look at it and start looking at these confluence levels. We haven't had any real reason to do that on many stocks. My guess, though, is this move down and a fairly decent opportunity out here to see these lows in the market hold. Let's see out here, Dow's up 50. So did the market just move that much? It's up 10 more points. Come on. Where's the other one? Okay. Just want to make sure because I got a little lag today in the quotes. I don't want everybody going nuts on it. Okay, so what else do we have out here? We looked at Intel. We looked at Micron. Let's take a quick look at that one again since I'm in it to win it today. Oh, almost out of time. Okay. Here's what I'm looking at and what I would hope for maybe today. And we'll look at this when we come back. But this is the confluence range where I'm looking at for the pop to end up before the end of the day on a short squeeze into the close today also. So keep an eye on that when we come back. Confluence.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, I'm expecting close in the S&P cash over 2,600 today, and that would probably put us on the road. Probably, maybe next week, maybe within 7 trading days to be back up 2,700. I think we could do that fairly easily. There is a kind of a feedback loop when the market starts going higher, and that's people shorting it every single day and covering it in the afternoon. So watch for that. Watch for moves in the last 30 minutes of the day going forward. Again, does not put an end to the case for a bear market, but generally these things last a while, I mean months, before you get the next leg down. It certainly did in 2000, and rare that everything just falls apart and the wheels fall off the wagon in the whole day. Talking about one of my intraday trades out here, I'm holding to sell, but something else may happen out here, but or it may have already happened because I'm doing the show, I don't know. But keep an eye on confluence levels in these stocks, because this is where you're going to start running into these. If you don't have, as I said before, the Art of Timing the Trade book from Tom, he outlines these, and I did the charts on them some time ago. So you can look at these things, but it is when the 618 and 382 of two different moves kind of get together, and they're very close. If they're just a few pennies, especially on stocks like Micron out here, they will give you a very good indication of where you're going to find everybody sitting on top of the market. You can always get the Art of Timing the Trade software, and I think we have a 30-day money-back guarantee on it too. So you can take a look at it, but get the book, learn these things, because we haven't had a market like this for a while. This is where these things are going to pay off big. See you at 3:30 with Tom O'Brien. We'll be talking technology for this week. And in the meantime, sell when you can, not when you have to. Or cover when you can, not when you have to. We'll see you Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.